Now for War on Your Dollar, which is being brought to you today by Schaefer's Investment Research. You can find them on the web at schaefersresearch.com. We've talked about before, I want to shift the gears, about the Greek debt crisis, and we've talked about it. But it seems as though it's starting to have the side effect of boosting sales of U.S. Treasuries, which in essence allows the U.S. to assume more debt. Is this by design, John?
No, even with my most cynical hat on, I can't believe it's by design. It was an accident, and nobody, even if they think they've got a better car, just drives into another car. Because this one is spreading. And you see the pigs in trouble now, which are all in the Eurozone. But if you look outside the Eurozone, even within the Eurozone, you've got Ireland and Iceland heading for trouble. But if you look outside, you've got two real big players heading for the same problem, and that's the United Kingdom and the United States. So it's going to be a huge problem. And I believe that to overcome it, people have to invest in money, but real money, like gold and silver, I come back to. Because what you're having now, in the last great crash, we had an enormous amount of corporate defaults. What we're heading for now are national defaults. And so pieces of paper are going to become worthless. And just like the bonds of General Motors were worthless. And so a lot of Greek bonds and a lot of other bonds. Greece, as I said before, only 2% of the European Union. But just like the subprime thing, the moment that tips and you start reverse leverage, the whole pack of cards comes down. And there are some very big cards, the size of the United States and the United Kingdom alone, are huge players. And Germany has a deficit now, and it's the big money maker of Europe. But how can it possibly finance the whole of the rest of Europe?
Well, I mean, Greece is, like I said earlier, their debt's been just downgraded to, it's not a laughing issue, but it's been downgraded to junk. And then you have Spain, which is 5 times the size of Greece, and now they're downgraded. So the trickle effect has begun. And you've seen the euro, we're seeing the crack of the euro, we're seeing the crack of in the eurozone right now, right in front of our eyes. So you would think, I mean, yeah, the euro flattened out a little bit, but you know, you would think that you would see, the point is that you don't see much buying in the dollar. There's not that much faith in the American dollar right now. And, you know, it is going to keep trickling into the Irelands and the Icelands. And, you know, and like I might have said this before, I'll say it again, is, you know, Greece can maybe get a bailout. They have 2 choices, beg for a bailout or default on their debt. And possibly then the Americans, then who has to bail them out? The Americans possibly. And if, you know, and if not, you know, they don't get bailed out. Who bails out America? That's the question. Who's going to bail us out? You know, in the tune of what we got. You know, and that's going to reflect right into the dollar. The policies, you know, is to debase the currency. That's what we've been doing for years and years and years. You know, and I just don't see as much faith in the dollar worldwide. And then over to China, if they start reevaluating the yuan, you know, it's going to be a mass exodus out of the U.S. dollar again. People are going to, you're going to see the big funds taking their money out, going into China.
It's one area where the individual investor has an advantage over the big boys. Because the individual investor can move out of the euro, out of the dollar, out of sterling into gold and silver. But if big investors do it, they have political pressure put on them. I mean, if you imagine PIMCO, the biggest bond fund in the world, started selling U.S. Treasuries and moving into gold, it would cause a calamity itself. So there's huge political pressure on them that isn't on the individual investor. So in this one area, the individual investor is better off than the big boys.